Hi there. So today I'm going to be talking about how to build a winning investment portfolio. If you want to become an investor, you must know how to build your portfolio. Now, the first thing you need to know if you want to build your portfolio is to know how to allocate your assets. Assets allocation. What do I mean by assets allocation? That is, you are spreading your assets across different asset classes. In the investment market, there are different asset classes. You have your stocks, which are generally high risk to high ratio. Then you have your bonds. Bonds are generally low risk, and you get steady income from them. And then there is your real estate. Real estate will give you steady income plus growth. And then there is also gold. You can invest in gold and cash. That one will help you during market crashes. When the market is not stable, investor tends to buy or invest in gold. So that one depends on the market situations. As an investor, you need to learn how to balance your investment across all these different assets. So you need to know the portion of your investment you put in stocks. You need to know the portion of your investment you put in bonds, the ones you put in real estate. But you don't need to invest in all of them at once. You can just, especially if you are starting up, you can just choose to invest in, let's say, stocks and bonds, so that you can balance your risk. After allocating your assets, the next thing you need to learn is how to balance them. Under your stocks, stock have different classes as well. You have your growth stocks, that is growing companies that when you invest in this kind of company, they reallocate their gains, that is they reinvest your gain into the company. And then you have dividend stocks. These are companies that pay dividend yearly or quarterly. So you can choose to, if you are the type that is looking for dividend, you are looking for steady income, you can choose to invest in dividend stocks, so that you can be getting quarterly return on your investment. Then we also have valued stock. Now, value stocks, they are like, how will I explain it? They are like investing in undervalued company. Their shares are generally cheap, but when you do your financials, you see that these companies, they are undervalued. So when you buy into this company, there is a chance that over time they will appreciate and they will grow. So you can choose to invest in undervalued stock. If you have successfully allocate your assets and then balance your asset into these different categories that I've mentioned, after some time, especially let's say 1 or 2 years, you need to do rebalancing, because all your stocks are not going to grow. All of them cannot just appreciate at once. Some may be doing well, others may not be doing well. So from time to time, you have to check your portfolio and see the ones that are doing well. So the ones that are doing well, sometimes you can decide to buy more of those ones, maybe put more money on those ones, and then the ones that are not doing well, you can decide to sell them off and then reinvest the money into the ones that are doing well. In essence, everything I've been saying is that as an investor, it's not wise to put all your eggs in one basket. You have to spread the investment and you have to balance those investments in order to see continuous growth. Now, in choosing the type of investment you want to go into, it depends on the kind of investor that you are. So if you are like a young investor and you have capital to burn, it's good that you can invest in a high risk to high ratio investments. Like your growth stock, you can invest in them if you are a young investor. But if you are a matured or an elderly person that's probably a retiree, then you wouldn't want to take much risk. So it's better for you to invest in things like bonds. You can buy bonds because they are cheap and they are low risk. But the catch is that bonds, the return on investment on bonds can be spread over a long period of time. So it can be in years, maybe 2 to 3 years. So that was that. Anyway, this is all I have for you guys today. I hope you've learned something. Bye now.